quickly running through them, short term to the downside, and it's been pointing down since basically last Friday, guys. And so whatever the Fed did, that move, you can see by this short-term crossover from Vantage Point, was clearly already in play. We had probably a 3-day jump on that move. Medium-term crossover to the downside, long-term crossover to the downside. Now, again, nothing goes straight up and nothing goes straight down. So we're going to see a retracement higher, perfectly normal. So to begin the week, again, I would be looking at things in reverse. So we switch the Vantage Point indicators out using the triple EMA and identify some upward pivot areas. We have 1173, 1162, and 1140.70 with a close of 1129. And this is just on the continuous contracts. I'm using that for the purpose of the presentation. So in order for the pressure to come off the downside, we would have to clear 1173. This is what a pivot point is. That is incredibly unlikely. So you're going to get a mild little rally, I'm sure, like we do every single week, but the inevitable move here is likely aggressively lower. So the sellers will be camped out up top, waiting to get into a short position, and myself included. So keep that in mind. And if these equities continue to push lower, what is that going to do to the commodity currencies? Well, it's going to be quite devastating for New Zealand, Australia, and CAD. Those currencies are going to continue to weaken. Now, again, looking at going into our specific currency pairs, the Australia-US currency pair clearly under some heavy pressure here. Our key level now 102.72, 1.0093, and then we have the 98.84 level with a close of 97.80. So basically shorts just under parity. That's where you're looking to get back into these shorts. Again, a little bit of a relief rally, but nothing to really warrant any complete and utter reversal in the current trend of the Aussie-US currency pair. My opinion is this currency has been grossly overvalued for many months now, and a move back below 90 cents is entirely possible, or even lower, to be perfectly honest. And again, that's not. I still question whether it's whether it's going to be overvalued or not. So definitely one to watch there. Now, the Euro Swiss franc, I've talked repeatedly about this with my own clients. We should all have standing buy positions sitting in there right now at the 120.30, 120.40 level. I've made this recommendation for weeks now. The Swiss National Bank has pegged the euro. The euro is pegged to the Swiss franc, or whichever Swiss franc pegged to the euro at the 120 level. So this could be a more medium to longer term base. Now, we are going to still have volatility because of what's going on in the Eurozone. The ECB, very possible they could cut rates. But the bottom line is the Swiss National Bank is taking some very aggressive maneuvers here to make sure that this doesn't turn the other way, despite what happens in the Eurozone. So for now, any move back, we're currently right now playing a range between the 120 and just under the 124 level. So in this particular case, when it moves lower, we buy. That's what we do. The primary trend clearly up, and we're supported by the Swiss National Bank. This could be, in theory, this has been, for the last several weeks, one of the easiest trades in the Forex. So I certainly hope everybody's capitalizing on this. Now, looking at some of our other fundamental plays that I find interesting is, once again, gold is just getting hammered. This has taken out a number of key levels. I made the recommendation to sell this to my own clients and here on Trader Planet basically at the fourth week of August. And you could clearly see that this was losing momentum. The dollar was starting to gain strength. This pattern is likely to continue. There's a couple of levels on the lower side to watch. We've closed at 1637. That's incredibly bearish now for a number of reasons. We may see some support down around that 1550, but I question whether the sellers are not going to be out in full force yet again once that thing moves higher, myself included. Now, is gold a bubble? Nobody knows that for sure. Not me, not anybody on TV. You just don't. So you have to wait, look at the technicals, see how the equities mark, see how the equities progress, see what's happening with the dollar, the euro, all of these other markets go into what happens with gold from here. So for now, we are definitely turned very, very bearish. This triple EMA cross from Vantage Point has not completed since the end of June. So this is in theory a trend reversal that's been in the works for about 3 weeks now, actually. And again, this, everybody's surprised gold is selling off. Well, when you break this down looking at the Vantage Point software and you go back to the short-term crossover, this was like back in the short-term crossover went off essentially back, like I said, at the end of August. This should not be a big surprise what's happening here. And if we see again the medium-term crossover confirmed it at the end of the first week of September. Using the Vantage Point crossover, then again, looking up at the 15th of September has confirmed we are still moving in that direction. So we always like to be a little bit ahead of the market, and I certainly think we were ahead of the gold trade here on the short side, where your hardliners that gold's going to 2,000, they're certainly taking it on the chin right now, aren't they? So looking at the light sweet crude oil, this is following the equity markets, and as long as the equities continue to move lower, so will crude oil, and vice versa. The reality is the unleaded fuel contracts a little overvalued there too. People in the US are not driving. They're starting to carpool. I don't know what's going on, but clearly the demand is considerably lower. This is another indication of a potential of a global recession coming here. So be very, very don't think that because crude oil is at $79 a barrel that this is a terrific buy. Be very, very cautious of that type of trade, because it certainly looks like we have plenty of room to extend lower before we move higher, if we do at all. Again, I always want to point out to everybody too, during that last recession, it certainly didn't take too long before crude oil hit $35 a barrel. So just be cautious with that. Don't if you're going in on a counter trend, be cautious. Looking at the pound dollar, what's going on with this for this week? Key level 158.10, 156.19, 154.84. Now we've closed at 154.82. The pound is getting some strength actually from the cross pairs, specifically Great Britain, Swiss franc, Euro, Great Britain.